Our last presenting company is Argex Titanium. Again, the name gives it away. Nice chart versus the TSXV. And there's a reason for this. It's been producing some pretty solid business developments, and this is a company that's seen to have a lot of blue sky around it. It's currently in a collaboration agreement with multi-billion-dollar conglomerate PPG Industries, which is the parent of Pittsburgh Paint. And the market is expecting some announcements to come in the not-too-distant future in regards to that relationship. Argex has a pilot plant in Ontario that is not only operating in keeping with management's expectations and objectives of 10 kilograms per day, but the purity is better than projected. It's targeting an industrial facility by late 2014, early 2015. It has a proprietary process, as is being proven in the pilot plant, and once scalability is proven in an industrial module, it could be very well a game changer, as no company currently would come close to Argex's cost structure for the production of titanium dioxide. Based on its technology, and again, without saying too much about the company, it could very well turn slag heaps that are environmental liabilities for other companies into high profit centers. And this will be done on a module basis. Argex was approached by a New York-based fund a few months ago that already had a large position, and this fund said, "We like your story so much that we want to put another $5 million in," and they did it at a slight premium to market at 93 cents a share, and there were no warrants or fees attached to it. Byron Capital and Mackey Research have $3 and $3.10 targets, respectively. The stock is currently in the dollar range, and there are 115 million shares issued. The daily average trading volume last year was 425,000 shares, and this year it is 318,000 shares. With that, also from Quebec, this time from Montreal City, I'd like to introduce the CEO, Roy Bonnell.
Thank you, Grant, and thank you, everyone, for the opportunity to speak to you this afternoon about Argex. I could speak for hours. I'm going to try to do it in 15 minutes. For those of you who are looking for deeper information, we try to keep as many publicly available documents on our website at argex.ca for your viewing pleasure. Argex is focused on titanium dioxide, a lesser-known commodity, although it is everywhere. Everything you see in this room that is white is probably white in part because of TiO2. All paint starts out white, and that is because of titanium dioxide. It replaced lead in paint. It's what makes paint white. It's what makes it opaque. It's the light reflecting off the titanium dioxide particles that masks whatever your paint is covering. As such, it's the most important pigment in the world, and it's about 20% of the cost of a can of paint. TiO2 prices have almost doubled since 2010. The industry consensus seems to be that it's going to continue to rise, with some people predicting prices over $6,000 a ton by 2015. There are a couple of key reasons for this that aren't going to go away. One is the world is running out of supplies of available rutile, which is a high-grade TiO2 deposit, and TiO2 usage is almost perfectly correlated with GDP growth. So as long as you have countries like China, like India, like Brazil, that are continuing to see big increases in their standards of living, you're going to see approximately the same increases in the use of titanium dioxide. Just as a measure of how big the market can get, here in North America we use about 8 pounds per person per year of TiO2. In China and India, they use around 2 pounds per person per year. So as they approach our standard of living, it's not too much to conceive of their usage quadrupling over the next few years. Its main usage is in paint. but TiO2 is a ubiquitous substance. It's everywhere. One of the big advantages of TiO2 over lead, it's completely non-toxic to the point where we all digest it every day. It's in our toothpaste. It makes the cream in your coffee white. It's in your yogurt. It's a food colorant. And it really makes it hard to replace in paint just because of that characteristic of it being so non-toxic. The worldwide market for TiO2 is about 6.5 million tons per year. As I go on and talk about Argex, even as if we're targeting 200,000 tons a year, it's not going to be a big enough percentage where we're going to make a dent in terms of the supply to the market and the pricing. The prime directive of Argex as we move forward is to move quickly to production while mitigating risk. That has been our strategy for the last 18 months, and I think it's a strategy that's been well received by the market as we've gone from a $35 million market cap company last year to close to $125 million market cap company today. I want to talk to you a little bit about our technology. There's two technologies right now that's used to make TiO2. One is a sulfate technology, invented in 1918, basically uses high pressure, high temperatures with sulfuric acid to make TiO2. The other is a chloride technology invented by DuPont in 1948, which uses the same but uses a chloride solution. Those two technologies have large environmental risks associated with them. They also can treat only limited numbers of deposits and were really developed for rutile. Our technology was not focused on rutile. It's focused on ilmenite, FeTiO3. It is a much more abundant form of titanium, but from the other's perspectives, it's a more expensive form to treat, and also because it's not as pure, they have a hard time getting a white and bright form of titanium dioxide. Our process is actually a solvent extraction process. As such, many of you are probably familiar with solvent extraction, which is a well-known process for treating uranium. You can go next door to Saskatchewan. You can see the same equipment that we'll be using operating on a commercial level and has been since about the 1970s. It's used in copper, nickel laterites, but this is really the first application of it to titanium dioxide. It comes with a number of advantages. It's lower cost. We have a closed loop system, so all of our hydrochloric acid gets recycled, and we also have a byproduct of a very high purity hematite as well. So because of that low cost, because of the challenges really that the paint companies are facing and watching their margins narrow as TiO2 prices increases, we became a very interesting technology for companies like PPG. And we've been working with PPG now since last year. Whenever you have a new technology and you tell people that this is going to be a game changer, it's important to have somebody validate it. And really that's what the PPG relationship does for us, is that you have a industry leader, the second largest paint company in the world, that says, we've tested this, it meets all of the specs for use in paint, and we would be willing to use this in our paint. We signed a collaboration agreement with PPG on April 3rd. There's two real parts to that collaboration agreement. Firstly, we'll be using a PPG coating so that our TiO2 can be applied in architectural paint, which is the largest paint market and thus the largest usage of TiO2. And secondly, we're in the process right now of negotiating a offtake agreement with PPG, which should make us one of the most substantial suppliers in the world to PPG of TiO2. What's nice about PPG is it's a very conservative company. They don't lend their name to anything lightly. And I can tell you, because of their reputation in the paint industry, if it's good enough for PPG to use, it's good enough for anyone. We did a PEA on one of our properties, which was a low-grade ilmenite deposit on the north shore of Quebec, 18% titanium dioxide in the rock. We demonstrated a NPV on that property of $2.2 billion. As we commence, we will actually be using not a 11 or 12%, sorry, a 17 or 18% TiO2 as you see here, but we'll be using a 47 or 48% titanium dioxide. So that will mean we'll go to, first of all, we'll be able to go to cash flows more quickly, but also it'll give you an idea of the real economic size of what we're proposing here in terms of an NPV. If you see we can do 2.2 billion with 17 to 18% TiO2 in the rock, the calculations for 47% become a little bit silly. We currently have NDAs in place with other end users, and we're going to probably be in a position as we move forward after the PPG announcements that we expect in the future, I think that everyone expects in the future, to start rolling out other announcements with other end users. We announced just 2 weeks ago, in fact, that we started our bankable feasibility study. Our bankable feasibility study is expected to be completed by the end of the first quarter of 2013. After that, we're going to be doing our project financing, building our plant, and with the idea of being in production and being commissioned by sometime in 2014, just in time as we're still moving up the shaft of the hockey stick in terms of those ever-increasing TiO2 prices. We've put together a team at Argex that's focused on production. Our chairman is the former president and CEO of one of the largest aluminum smelters in the world, as well as having experience with BHP, running aluminum smelters for them in South Africa. Another one of our board members, Normand Bergeron, is the former Minister of Deputy Minister of Energy and Deputy Minister of Natural Resources for the province of Quebec, two areas where I think it's important to liaise with the government. Our COO, Enrico de Cesar, deep background in operations with companies like Severstal in Russia, but also in terms of equipment vending, which is tremendously important in terms of constructing our plant, and also a great knowledge of metallurgy as well. I'll mention a couple of hires that we've recently brought on board. Philippe Guimet joins us from after 15 years of experience in sales and marketing with Kronos, which is one of the largest TiO2 producers in the world. And we also brought on as our chief engineer just in September, Ian Cox, with 30 years of experience in terms of technology and building plans. So really the prime directive of Argex is a simple one, and that is move forward towards production as quickly as possible while mitigating all risks. We've had a good year. We've watched our share price increase in a very difficult market for a lot of natural resource companies. And we've been blessed by not only good news coming out, but a very loyal shareholder base, which remains very excited about the story. That's it. Thank you.